Hello, everyone, and welcome to episode 31 of Great Quarter Guys. I'm your host, Andrew Cox, and I'm with me, as always, Kevin Hill, and then we have another special guest, the Director of Passport Research, Mr. JP Hampstead. How are we today, boys?
Doing well. Thanks for having me on, Andrew.
Yeah, man. How about you, Kev?
I'm doing good.
Weekend?
I had a good weekend.
We got some time off.
Got some time off. Back in the seat today. And thanks to Carrier Direct, as always, for providing some research into the show here. And it's a great topic. I love this topic.
Yeah, we're going to do a little bit of a mashup of some things we've been reading lately. We're going to talk a little bit about the market share of the digital freight matching players and how that leads into also the evolution of Amazon Relay, their app that they have now kind of evolved into more of a brokerage app, less of an app that was just focused on getting drivers around their facilities. JP's team has done a lot of research on this. They mapped out the Amazon Logistics platform just about a month ago. So we're going to get into detail on that here soon. But before we do that, we'll start off with one good piece. We're going to continue this Bank of America data. It's been the good piece of data for the last few weeks. It has continued to be good. We've got it up to the 23rd of May here. And some of the takeaways here are that the spending has bottomed again. We've talked about this for the last few weeks. It has bottomed and is stable across the board in every category. One kind of downside that we are seeing here that the data could be a little bit artificially inflated on the debit card side, simply because people are not using cash right now because of the germ effect, trying to avoid it. But overall card spending was down an average of 10% year over year in the last 7 days. That is significant improvement from April and even March, where it was down around 40%. So things are trending upwards, but it does remain foreseen how long this can go, if it's sustainable at all. I mean, this is definitely being propped up by government spending and by the government, the paychecks to people. So we'll see how long it can last. But we'll just jump right in. I mean, we'll jump right into our discussion. So the digital freight matching market share. Let's talk a little bit about the background here, Kevin, why we care about app downloads. We know there's a lot of different ways that brokers and load boards connect with drivers. So why should we care at all about app downloads?
Well, it's the wave of the future, right? Automated freight booking is what VC money has been pouring into the industry for the last few years, and it's where everyone is driving to, trying to automate that carrier sales process. And then that's a big thing for freight brokerages. It's more efficient. It's challenging, though, getting enough scale of carriers or small carriers, owner-operators, people really with 1 to 3 trucks in their fleet, onto an app that's widely used. And that's where you see kind of the market share disparities across the board. And the reason why not one app has all that much market share whatsoever. In this UBS report, they use Google Play downloads and other downloads from stores to check out who's downloading the app. So usually every 6 to 9 months, so they produce this report. It's fascinating. We do a survey of drivers, and that kind of gives you an idea of how stickiness those apps that have been downloaded are in the future. So it's very important. It's where the industry is going, and these are fascinating market share numbers.
And I would just add to that. I agree with everything you said, Kevin. But the other reason why app downloads are so important is because that's how a lot of 3PLs and shippers get visibility into where their freight is through an app on the driver's phone. So it's a really, the phone itself is an important piece of technology, and it's important that drivers use apps. So I think that's also a big piece of it. And the other thing is just that it's really going after, like you said, the 1 to 3 truck fleets that aren't big enough to have their own dispatcher or hire their own dispatching service, where they are having to source their own freight. And that is truly like the really fragmented owner-operator, spot market-driven kind of end of the industry.
And that's a very good point to the visibility, because we talk about these app downloads as part of freight matching, and that's what that's what I care about the most is freight, but the visibility tools as well. If you take Trucker Tools, MacroPoint, Fork Heights as well, besides the digital freight brokers like Uber and Convoy, and then the legacy freight brokers like J.B. Hunt, C.H. Robinson, TQL. It's really about visibility. That's a key component that I always kind of oversight.
So yeah, so that was one of the key takeaways, Kevin, is that there is no real clear winner of this freight matching app battle right now. You know, as like you said, they do it about 6 to 9 months. They do this survey every 6 to 9 months. The last one came in August 2019. So right now there's 9 players that have a 5% or greater share of downloads, which compares to 10 players back in August. And the largest share of downloads is 15% right now, and that's DAT. We'll talk a little bit about them in a second. They've had a really big jump in market share since this last reporting in August. And MacroPoint has fallen off a little bit. They were the number 1. They've now fallen a little bit back. But again, pretty much the same mix of people. We still got about 9 or 10 there that have a solid footing. And we've seen that in our surveys as well, haven't we, Kevin?
Oh, we have. You know, you have the 2 major load boards, DAT and TruckStop, that are there. And from our surveys, that they have the highest stickiness as well.
Correct.
Then you have the 2 pure plays, Uber and Convoy. And then you have the top 5 freight brokerages, and then you have also the visibility tools, as JP said, Trucker Tools, MacroPoint, 4 Kites.
Right.
So, and as far as source freight, you can't really get that from download numbers from our last survey back in August, September of 2019. We found that drivers they still only source about 11% of their freight from freight matching apps. So that's more of a positive, because that market's, you know, you have a long runway to run expanding that market.
What do you think is behind DAT gaining so much market share so quickly? Do you think that it speaks to like softness in the freight market, and therefore people are trying to go to a platform that has the most freight? Do you think it has something to do with the way that, you know, spot volumes have been disrupted, you know, going to traditional brokerages? I'm really curious as to like how the load boards have, you know, kind of struck back in a way.
They could maybe be playing catch up, right? They were one of the later entrants making upgrades into their mobile platform for a freight matching app. So they're really ramping that up, whereas everyone else has been out for pretty strong for 2 or 3 years. So there wasn't a huge gain in market share for, say JB Hunt or C.H. Robinson, but they've had freight matching apps for 2 or 3 years. So the new downloads should slow down.
That's a good point. Yeah, I like that idea, because I think the load boards have been slower to ship new features than especially the digital first guys. And I just remember, you know, when they started, it was a big deal when they released like the Book It Now features, and maybe that is one thing that's driving the downloads. I know that a lot of owner operators, English isn't their first language. They don't necessarily like being in a position when they're negotiating with a broker over the phone, and they really like Book It Now features. So, you know, maybe it is a little bit of that catch-up effect.
I think that all of these are good points. I would think also that going to the biggest load board in a time where volumes are kind of scarce there for a few weeks, that's probably one of the things that pushed them up. But I also just look at where the market share came from, and as Kevin said, the big legacy players, they're really stable. You saw C.H. Robinson and JB Hunt, they stayed steady at 6% and 5% downloads. But it was something a little bit of surprising to me that I didn't think this would happen so quickly, but that Uber Freight and Convoy are falling so quickly here. We're only halfway through 2020, and you know, this is when we're supposed to see Uber and Convoy make their run up, and Uber fell from 11% to 7%, and Convoy down from 4 to 3. So, you know, you can see that I don't know exactly what DAT is doing, but you can see where the market share is coming from, and it is coming from those younger players.
Yeah, and you know, they've been adjusting toward profitability, and what that means for these guys is it has to do with the way that they kind of subsidize both ends of the market to create liquidity in their marketplace. So they gave back freight to their shippers that was mispriced, that they couldn't afford to lose money on anymore. And they're probably also offering fewer incentives or less aggressive marketing spends in order to drive adoption of their apps on the supply side or the carrier side. So kind of trying to right size that marketplace and make sure that, okay, if they are taking less freight, you know, it doesn't make sense to keep like, you know, shoving their app everywhere and promoting it everywhere, you know, if they need the capacity side to adjust as well.
Who do you think that benefits the most? I see it benefiting, you know, legacy players like C.H. Robinson and Echo, people that have seen their margins kind of get squeezed here in the since these people have been pricing freight and trying to be competitive. Who do you think benefits the most from, you know, a less focus on profitability or less focus on revenue and a more focus on profitability from Uber and Convoy?
Yeah, I think the industry as a whole will benefit from them adopting more sustainable long-term business practices. As long as they, I mean, I think they've already done a great job driving innovation across the space. I mean, you've seen everyone. We were talking about the load boards catching up, but of course, all the other legacy brokers had to as well. And I think it's been really interesting and positive for shippers and consumers and the economy. But yeah, I honestly, I think the entire industry benefits when people are, trying to make money in a way that makes money for their shareholders.
Yeah, and Ryan Schreiber wrote a very good commentary, I think last week on FreightWaves.com from Carrier Direct, Ryan Schreiber, about why the innovation that Uber and Convoy have brought to the table has forced everyone else to be more customer-centric, to adopt new technologies, and it's really created that technology arms race that we're seeing, in reports like freight matching, visibility, just really efficiencies all down through the operational side of 3PLs.
That leads really well into the third takeaway that I had from that UBS report, and that's that Amazon's connectivity and their presence in brokerage is gradually rising. As they always do, they seemingly get their toe in, learn the market, and then learn to disintermediate their partners and take the market share. So this is something that you wrote about with your in your report the last month. You want to talk a little bit about kind of the evolution of Relay, how it started with drivers just as kind of helping them get around the Amazon facility and what it's moving to now?
Yeah, and maybe before Relay, we just talk about the evolution of Amazon's brokerage in general, which really started as a kind of an internal marketplace for Amazon operations people to match Amazon freight on Amazon trailers with for-hire power-only tractors, right? And so Amazon was moving these full truckloads and less than truckloads from Amazon facilities to other Amazon facilities. They owned the origin, the destination, and the asset. They had perfect visibility into the location at all times because they had the trailer. And, because they were running the facilities, they could automate that to a high degree. They could adjust dock schedules and things like that on the fly, and it worked very well. Well, then they decided to say, like, hey, Frito-Lay, you ship a lot of product into our network, into our facilities. Why don't you let us run that freight for you? We'll manage that transportation and broker those loads ourselves. Then it became a lot more complicated because they were dealing with these more variables and things outside of their control. They couldn't really automate it that well. And so while they built the technology, they kept the outward-facing brokerage really small. They were bidding on hundreds of millions of dollars of freight, but not aggressively. And so they were only doing $7 million a year. And that was around the end of 2019. Since then, they've turned on the faucet. They've employed a lot of people in call centers to do cold outreaches to people, asking if they have freight, trying to get more freight, trying to feed their system. So it makes sense to me that they've also expanded the functionality of Relay, which is now a place for drivers to interact with their freight, for carriers to look and pick loads and figure out how to move these Amazon trailers. It's not just about saying, okay, your dock is open now, or okay, move to this side of the building. It's really more of a freight marketplace like those other apps.
And you've really seen that over the last few weeks, right? Because you wrote the article back in early last May, and it was a test type of freight.amazon.com where you had 3 states in the Northeast, and that's kind of their pilot. It's expanded nationwide, and if you Google freight broker or freight brokerage in whatever your third, fourth, fifth word is, somewhere in the top ads, usually ranking about second or third in the ad space on Google, you're going to find an ad for Amazon Relay.
Yeah, so
they're really supercharging that out and promoting it.
Yeah, they're buying up those Google AdWords and making sure that they get their name out there. They're doing all different kinds of things that a brokerage that wants a lot of freight would do. And just to be clear, you've got the internal facing brokerage operation, you've got the outward facing or customer facing brokerage operation, And you can think of the outward-facing part as being split into two groups. One, which of course is contract, and the other, which is sort of their spot digital portal that we first reported on, and now they've expanded it to all 48 states. I think that's interesting, and I don't really know what their goals are for that platform and that site, but I do know that like it's really going to be how they bid on contracted freight. That's what's going to determine the growth of their brokerage, right? Like, what margin is acceptable to them? How much money do they want to, make essentially by filling backhauls or doing whatever they're doing? That's going to be the key. So I kind of look at the digital platform as kind of a sideshow. I mean, it's like for one-off quotes, like to a company like Amazon. It's I don't think it's ever going to be huge, but their brokerage, is clearly interested in growing volumes.
So, we've talked about their unified front with expanding the brokerage on the internal and external facing place. And you broke down in your article, or in your paper at least, you broke down the different strategies of Amazon Logistics moving forward from warehousing to trucking and final mile. How does the warehousing front, where they're building out all of these little delivery stations, how does that fit into their unified push forward here?
Yeah, that's a really good point. So they Amazon has a number of different kinds of facilities. The one that everyone sort of thinks about as being the huge Amazon warehouse is called a fulfillment center. Those are hundreds of thousands of square feet, more than 1,000 workers, and those are kind of like the sort of the main arteries of Amazon's network. But what they're really focused on building out now are these much smaller delivery stations, which are the origins for their final mile freight. So this is where in the past Amazon was taking about half of their final mile freight and dropping it at post offices. Right. They're using LTL carriers like XPO and other providers to drop pallets off at post offices to be delivered by the post office to people's houses. Now they are dramatically insourcing that final mile capability. They're essentially doubling the number of delivery stations in their network. They'll drop pallets there, and then Sprinter vans will take the freight or take the parcels from those delivery stations and run their routes. So, if you're a parcel integrator that does business with Amazon, or I think also if you're an LTL provider that does business with Amazon, you might see Amazon taking more of that business away from you, insourcing it now that they're building out a really dense and widespread physical network, the kind of network that you really need to support an internal LTL operation.
Do you think some of that insourcing is, especially from the USPS, the Postal Service, is because of that risk or that uncertainty of new rates that the administration is threatening?
I think it's two things. Yeah, I think it's certainly there's a lot of political risk, right? Rates with the USPS, there's pressure on them from congressional Republicans to be more profit-oriented, which is obviously going to hurt Amazon. The Trump administration has a beef with Amazon. But I also think it's about service, and it's about making sure that they can extend, same day and even 2-hour prime delivery to as many markets where it makes sense for them to do that as possible. And I think that was actually kind of behind the delay in the rollout of the brokerage too, is that they found that their technology wasn't quite suited to deal with all the unknowns of customer freight, and they really have a high commitment to service and wanted to kind of perfect that before they grew it a lot. So it's probably just as much as service as a cost thing for them.
Yeah, I mean, you look at when they started purchasing trailers. They started buying trailers back in 2015 or so, and they didn't start running them. They didn't start brokering any excess capacity until 2019 or 2018. So, they definitely set things up, make sure they have their ducks in a row before they release it to the public. So what about, you didn't write about it much in the paper, but you did hint a little bit at maybe an area for growth that Amazon is definitely looking at is air cargo. They've rolled out a lot of different hubs. They're now building a new one in Kentucky. They run a bit of a hub and spoke model on the air cargo front. Where do you think Amazon goes from here? Do they continue focusing on air cargo? Do they try to completely cut out FedEx? Where do they go there?
I don't know. It's interesting because their air cargo seems to play a little bit different role than it does in FedEx, or actually, I should say that with regard to Prime, it has a little bit of a different role, right? So FedEx, pioneered air cargo in the central hub in Memphis in order to be able to do next day delivery. So pretty much anywhere in the country, if stuff flies into Memphis, gets sorted, flies out, and then gets delivered out from that destination. You can get hit anywhere in the country by the next day. But if you're trying to do same-day delivery, you can't really string together 2 cargo flights in a row. It doesn't work very well. So, to me, I wonder, I think that the air cargo component of Amazon is useful for positioning freight and positioning inventory in advance, but it's really about the delivery station. It's about them being able to predict consumer behavior, to suggest things to people, to know when they're going to buy things, to get people to subscribe to buying things over and over again, and having those delivery stations with forward positioned inventory. I think the air stuff is a crucial part of that, but it's almost it's only the foundation of what's going to be a very almost intimate feeling service offering where stuff shows up as you want it.
Yeah, it was like we spoke to Seth about that last week when we were talking about, he wrote a paper on final mile, and he's now looking at or he wrote a paper on autonomous vehicles, now he's looking at final mile, and I was kind of asking him which one he thought would come first. Was it that micro-fulfillment, more like the Amazon delivery stations, or will it be the autonomous vehicles? And he definitely agreed it would be the micro-fulfillment, and Amazon's proving that now. They're already outrunning it. What are they building, another 90 or 80 or so delivery stations this year? And
what I think is going to be really fascinating is what if they start brokering that capacity? What if they start, if they establish the largest fleet of last mile fulfillment in the world? Do they start competing with Uber Eats? Do they start do they work with? Do they make B2B parcel same day? A reality for businesses. I'm just fascinated by what they do with that asset once they build it out and get it running the way they want to.
Well, that was one of the things that you mentioned as a possible headwind for them is in this breaking ties with all of these different trucking companies, that they might not be able to utilize their assets once they have all the assets out. That they need those relationships with competitive retailers and with trucking companies to be able to utilize assets. Maybe that's one thing they look at. They look toward more business-to-business freight to try to fill those assets. But this has been a great conversation. We could go all day talking about Amazon, but we are running short on time. So let's hop onto our long shorts. We've got some fun ones today. Nikola has been in the talks this week. They're supposed to be trading under their name on Thursday. They're currently trading under VT or VQIT or VTIQ, one or the other. Either way, it'll be in KLA on Thursday. So my question to you is not so much a long short, but which are you longer? So my question to you: who do you think it is that delivers the first alternative battery truck? Do you think it's Tesla, or do you think it's Nikola, and why? Kevin.
So when you say alternative battery,
yeah, so either electric truck or hydrogen truck. They're producing both.
A semi truck.
Yeah, semi truck, Class 8 truck. Who delivers the first one? They've both got massive order sheets.
Nikola.
Okay, Nikola. Why do you think so?
I think hydrogen's a little bit easier to manage and to build up the infrastructure. And I don't know if that's right or not, but I'm going to go with Nikola. Just a gut feeling, really.
Yeah, I agree. I think it's Nikola. I think I wrote about this last year, actually, but if you look at the way that Tesla's depreciation outruns its capital expenditures, it's hard to see them, they're clearly not investing in major new assembly lines or production facilities. So, how do you deliver a semi-truck at scale without CapEx?
Yeah, I would be short Tesla on this one, long Nikola. I'm with you. I think one, it's the focus of Trevor Milton and Nikola, where they're solely focused on trucks. Yeah, they've got the fun projects on the side with the Rave Runner and ATV or whatever, but they're focused on trucks. So I think that puts them in a much better position to get things delivered on time.
Focus.
That's right.
Focus,
I know some of you are always talking about Elon. Yeah, they're not they're not launching people into space. That's a fact. So the next one is just a crazy stock story that we've seen the last few weeks. We've talked about that Bank of America data, and we see home improvement numbers that are way up. We see people spending a lot of money on furniture, and truthfully, you just hear stories of people having to work from home, and they get in their house and they realize that they have a really terrible place to live and they need better furniture. So you saw this stock, this is Wayfair that we're speaking of. It was trading near 200 back in January, February, and then it just absolutely got smashed. It fell down all the way to 20, and it has since 9x'd. So it's sitting back around 200 now. So 9x since March 20th. I'll just leave it to you. I'll leave. Are you short or are you long the idea of Wayfair? Even competing with they are competing with Amazon or Walmart. Or you think they could be a major player moving forward? Would you buy the stock right now at near its all-time high?
I don't know if what the valuation is. I'm not sure, but I'm long Wayfair. I think they've done battle with Amazon. They've already done battles with all these companies, and they're sticking in there. So I would go long the ultimate value of Wayfair, whether their valuation is justified right now or not. I don't know.
That's surprising, actually. Seth and I had a debate whether you'd be long. He definitely thought you'd be short. I wasn't sure. He just figured you like old school kind of well-made things, and Wayfair kind of has a knock for making cheap stuff.
It's funny because we did the paper, our first paper when we got to FreightWaves off of your article on Amazon, and he went down through this detailed list of people who've done battle and basically crashing stock prices at first, but they've recovered within the next year or two, and Wayfair was one of the big success stories where Amazon couldn't take their market share away.
That's really interesting. Yeah, Amazon only has a few facilities that actually handle like can sort large packages. So I do think there's a bit of a moat there that may be underappreciated with Wayfair. I think I'm long. I think that as millions of people take work from home seriously, it's not just the normal kinds of furniture that people think about, like tables and couches, but I think there'll be a whole new sort of focus on productivity furniture and like desks and things that are also attractive, that can be easily moved and adjusted so that people can work or not from home and sort of transform spaces in their house like easily. And I can imagine like all new sorts of product lines and like selling kinds of furniture to people that they've never bought before, and that would be something that Wayfair should do.
Yeah, no, I'm actually long Wayfair as well, not focused on valuation at all, but I just like the idea of it being, a third-party platform where people can buy from a lot of different retailers. They can buy different brands. I think there's a lot there. I personally just bought a bed on Wayfair a couple weeks ago, full disclosure. I haven't opened it yet, but it looks nice. We're moving here in a couple weeks, so upgrading that. So yeah, so we're all long Wayfair. We all think Nikola's not much disruption here. We're no arguing between us three. Kind of some groupthink going on, but let's see what else. First of all, thanks for Carry Direct for taking care of us this week. Diane CO, always with the great research. Thank you, JP, for coming on, getting out of your house, coming hanging out with us.
What are you guys working on Passport right now?
We are working on some insurance data, looking at the difference between weekly new effective insurance policies for trucking companies and the difference between new effectives and expiring policies, trying to get a better read on how much capacity has been taken out of the market and when that inflection point and the great tightening will happen.
Yeah.
Awesome. And you can get all of JP's research and our research as well at Passport. So that's freightwaves.com/passport for membership.
What are you and Dune are going to talk about on Put the Coffee Down tomorrow?
The Last Dance. We're going to compare sales to The Last Dance. I still have 2 more episodes I have to go through tonight. I really got into it once I got into it.
Yeah.
It's fascinating. I remember growing up during that time, and you just forget so much. But it all comes back.
In the last episode, you'll hear the best line about Michael. It says it's not that he can run fast or jump high, but he can be perfectly in the moment at all the time, and that's what makes him so special. But we're on a 6-day, 23.5-hour break. We'll see you guys next time. Thanks for tuning in.